Even if you're not a finance enthusiast, the name Lehman Brothers should not be unknown to you unless you've been living under the rocks. And today we thought to tell you about the story of the rise and fall of this legendary company. We are sure that you're going to learn many things about life and time after watching this video. So stay tuned. Lehman Brothers was founded in 1850 when Henry's brothers Mayer and Emanuel joined him in what had previously been a dry goods and general business. Lehman started to develop into a significant commodities trading organization in the 1850s, concentrating on the crucial cotton market. When the business collaborated with Goldman Sachs on an IPO in 1906, it marked the beginning of its transition from commodities dealing to investment banking. Nearly 100 new stock offerings, including those of illustrious corporations like F.W. Woolworth, Studebaker, and Macy's department stores, were underwritten by Lehman between 1906 and 1926. Lehman Brothers extended their services with additional capabilities to handle proprietary banking, securities, and asset management, which may have been the beginning of the end. Major national upheavals like the Civil War, both world wars, and the stock market crash of 1929 and the ensuing Great Depression did not stop the corporation from operating and even prospering. The business evolved into a commodities brokerage before becoming one of the biggest investment banks in the world after going through a variety of transformations, spin-offs, and mergers. By the middle of the 2000s, Lehman Brothers had a sizable stake in mortgage-backed securities, or MBSs. MBSs and collateral debt obligations, CDOs, were overproduced as a result of the housing bubble, and by 2007, Lehman was the largest MBS holder. Lehman Brothers' 2003 foray into the world of loan origination was the cherry on top. The business bought multiple lenders, many of them specialized in offering the subprime loans that the US government had been promoting since the turn of the century. However, Lehman Brothers' downfall was brought on by the significant investments in MBS, many of which were brimming with subprime mortgage loans. And this is where you're going to learn about the tide of time. If you don't know how to survive, you will be finished. And greed just works like a catalyst in these situations. The housing bubble was in full swing in the mid-2000s, and Lehman, like many other companies, was getting more and more involved in the issuance of MBSs and CBOs. Lehman's real estate activities caused the capital markets arm to increase 56% between 2004 and 2006, making the company one of the fastest growing investment banking and asset management firms overall. With $19.3 billion in sales and a record-breaking $4.2 billion in net profits by 2007, Lehman was reporting impressive figures. By 2007 and into 2008, the market was flooded with bundles of extremely hazardous and hastily designed subprime loans. Actually, the crisis started in earnest as early as 2006. All it took for the number of home loan defaults to increase was a downturn in the housing market. The main rival of Lehman Brothers, Bear Stearns, was the first to collapse. The firm was acquired by JP Chase in 2008 thanks to a deal supported by the Federal Reserve. However, the deal left Lehman's future in doubt. Lehman was already weak. In the early summer of 2008, the business conducted an equity fundraising in an effort to increase market confidence. The decision, however, was less comforting when Lehman revealed an estimated third-quarter loss of up to $4 billion in September. Additionally, it disclosed a $5.6 billion loss from the write-down of hazardous assets. Over 77% of Lehman's shares fell in the first week of September 2008. The CEO at the time, Richard Fuld, tried a number of strategies, including a spin-off of the business's commercial real estate holdings, to maintain the company's credibility with investors and keep the doors open, but nothing worked. Lehman was perceived by investors as a ship that was sinking. The increase in credit default swaps on Lehman's debt and the retreat of significant hedge fund investors served as a strong indication that investors were fleeing. The failed buyout rescue attempts by both Bank of America and Barclays was the last nail in the coffin. Lehman Brothers was compelled to declare bankruptcy, which caused a final 93% decline in the value of the company's equity. Lehman Brothers eventually filed for bankruptcy, making it $619 billion in debts, the greatest business bankruptcy in American history. The majority of Lehman's investment banking and trading activities were subsequently bought by Barclays and Nomura Holdings after the company filed for bankruptcy. Barclays also purchased the Lehman headquarters building in New York. Lehman's demise had a significant role in the chain reaction of other financial catastrophes that finally led to the global financial crisis of 2008. Don't you think that the Lehman Brothers could have been saved by the Fed, or was it out of their leagues? Express your views in the comments below. Thanks for watching.